Welcome to The Explainer, where we break down what you need to know. Today we are diving into a really fascinating forecast for the fintech giant SoFi, and we're going to explore what the pivotal year of 2026 could have in store.
So what's on the table? Well, we're looking at 15 distinct predictions for SoFi's future.
And listen, these are not your typical safe bets. The author is actually super upfront about having about a 50-50 track record here, and even calls a lot of these ambitious moonshots. So let's just dive right in and see what could be coming down the pike.
All right, let's get into it. We're going to start with what our source calls the foundational plays. You can think of these as the high probability predictions, the layups. Okay, so the first foundational play, and the one the source considers almost a sure thing, is SoFi getting included in the S&P 500. And you got to understand, this would be a huge deal. It would trigger a wave of automatic buying from index funds, and it basically signals to the whole market that the company has officially arrived.
So that number 4 you're seeing right here, that represents the 4 chances SoFi gets to join the index during the quarterly rebalancing periods in 2026. And the confidence is pretty high that they'll make the cut in at least one of those 4 windows.
The second play is all about the financials. The prediction here is that SoFi's earnings per share, their EPS, is going to come in meaningfully above their own pretty conservative guidance of 55 to 80 cents.
And this isn't just wishful thinking. This optimism is really fueled by a few key things: a better economic outlook, hopefully with falling interest rates, the impact of new products they're rolling out, and some really aggressive moves by the company to clean up its balance sheet by paying down expensive debt.
And finally, for these foundational plays, the prediction is that SoFi will crack the top 45 largest U.S. banks by total deposits. Now, that is a pretty significant jump from where they are right now at number 53, and it would show some serious continued growth.
Okay, so those were the layups. Now let's get into the predictions that could act as real growth accelerants, the things that could really pour some gasoline on the fire.
First up, the source is expecting student and home loan originations to hit all-time highs. And we're not just talking about a little bit of growth here. We're talking about absolutely crushing previous records, partly thanks to a more favorable interest rate environment. Now, this slide shows what could be a really pivotal shift. The prediction is that the fee-based revenue, which you see there, is going to grow to over half of the total. This would be a huge deal because it transforms SoFi from just being a lender into a high-margin tech platform for other financial companies, making them a lot less dependent on the whims of interest rates.
Then we get to the tech side of things. The SoFi AI Coach is predicted to evolve a lot. The idea is it'll go from being a suggestion tool that you have to ask for help to a proactive agent that can automatically find, purchase, and even switch products for you, all based on your spending data.
And sticking with the tech platform, there are 2 more huge predictions. First, landing a top 5 global bank as a client for Galileo, which is their payment processing engine. And second, having a major legacy bank adopt SoFi's technology to launch its own branded US dollar stablecoin. I mean, both of those would just be massive validations of their tech.
All right, now for the really ambitious stuff. These are what the source calls the dark horse picks or the moonshots. These are the big swings that could be truly transformative for the company.
So as SoFi matures and starts really churning out profits, a big question comes up: what is the next big corporate move? The source suggests a couple of major paths could emerge.
And so the prediction is that one of 2 things is going to happen. Either SoFi becomes such an attractive prize that it gets a formal buyout offer from a legacy giant, or it'll start using its own cash to buy back its stock to reward shareholders.
But on the flip side, what if SoFi is the one doing the buying? The source predicts they'll use that recent $1.5 billion capital raise to make a strategic acquisition of their own in 2026. A likely target could be something in the crypto infrastructure space. A company that provides the plumbing for digital assets.
Okay, another huge moonshot involves going global. I mean, to maintain these high growth rates, SoFi might need to start looking beyond the US market.
And the top contender, according to the source, is Mexico. And this makes a ton of sense strategically because SoFi already has tech operations there thanks to their acquisitions of Technisys and Galileo. Plus, they just launched a remittance service. Other parts of Latin America and Europe are also on the table.
And the moonshots just keep on coming. The source also predicts the stock price could hit $45, which would be a massive leap. They also see SoFi launching a new marketplace for tokenized assets. Think fractional ownership of things like real estate. Then there's a big marketing push into soccer to take advantage of the World Cup for global brand recognition. And finally, a little bit of drama.
the potential departure of a key executive right after their stock options vest in mid-2026.
So, after all that, when you put all 15 of these predictions together, what's the ultimate takeaway? What's the story that this 2026 forecast is really telling us?
Well, ultimately, all of this really paints a clear picture of a company at a major turning point. It's moving from just a pure growth story to becoming a mature, profitable bank, while also scaling its tech platform and taking these huge ambitious swings on transformative global opportunities.
And that leaves us with a final provocative thought to chew on. If even half of these more ambitious predictions actually land, we might have to stop thinking of SoFi as just another fintech and really start asking ourselves if we're looking at the future of banking itself.